Yo, it's Mo. When you hear the word trading, what do you think? I know what I instantly think. I think of the world around me and all of the people that hear the word trading and they go, hey, look, Delta Airlines is down 6% today. I'm going to throw a ton of money into this and this stock is going to go straight down for me. Why? Because the market says it's that way. Because earnings came out today, so it's definitely going to go down. That's not trading. Trading is not taking a bunch of poop like this and throwing it at a wall and hoping that something sticks. It just doesn't make sense. So here's what you need to do. What you need to do is learn a process. When I hear trading, I look at it and I say, okay, there's a couple of things that go into trading. Number one, most important, it's the trend. If you don't have a trend, you don't have anything. The next most important thing, volume. Nobody thinks about volume. Anytime I pull up CNBC, Fox Business, whatever, they're talking about Delta Airlines going up in price, going down in price, doesn't matter. They're just not looking at the volume. This is why the futures are so important to look at in the morning. You have to understand, where is the volume going? This morning, we saw the market down 2.25% before everything started. And then instantly, when the market opened back up, we started to see a rebound in price. Stock price started coming up, and now I think the market's almost neutral at this point. Why? Because there wasn't a lot of selling volume this morning. So this is the gasoline to your car. Volume is the gasoline to your car. If you don't have volume, the market's not going to go anywhere. If you have a little volume and it's all going in one direction, that's exactly where your stock's going to go. But that's not real. So you have to have trend on your side and volume. Then you need to understand, where are my resistance points? Right now, I'm going to look at, this is Delta Airlines. I'm going to look at Delta on a swing trading chart, and then I'm going to pull them up on a day trading chart. So right now, this morning, it gapped down. They missed earnings or something to that effect. Lots of volume coming in. But what do you notice about where the stock price is? There's a purple line right here, and that's your 25-day moving average. That 25-day moving average is kind of like a magnet. So when the stock price is below it, this magnet is kind of pulling that stock price. It won't let it go below it, because that's a very strong support level for stocks. So you need to pay attention to that. So when we go over here to a 15-minute chart, this is a day trading chart, you notice we started up here, earnings came out, came all the way down, and look what has been going on throughout the day. Slowly but surely, it's been moving back up towards that 25-day moving average, sitting right around here. Let's find another stock. Let's look at Apple, for example. Apple right now is sitting right atop its 50-day moving average. What does that mean for the stock? It means that there's a really strong magnet there. So right now, we are sitting right here on top of this yellow line, which is the 50-day moving average. So if you're going to try to day trade this, for example, we'll switch back to the next chart, you're going to get some movement above this 50 and some movement below this 50. This 50 right here is $144.12. Let's go over to the 15-minute chart and look at it. And you notice today, $144.12 is somewhere in this range right here. You made a climb. You peaked over that area, came back down. My point in saying all of this to you, there's method behind the madness. This is not just taking something and throwing it at a wall, like I said, and hoping that the stock price goes up. That's not how it works. You need to have some type of process. You need to have some kind of safeguard in place. People always say to me, hey, Mo, what's your win-loss percentage? My win-loss percentage is somewhere in the 40% to 60% range. But on those other 40 to 60% that I lose on, there's a stop guard in place. My losses are very minimal, and that is why I beat the market. That's the reason why I beat the market. My wins are going to win. I'm going to make, 5 to 20% on a trade. Notice I didn't say 60 to 100% on a trade. 5 to 20% on a trade. But my losses, even if I lose 7% on a position, I probably only had 20% into that stock of what my total position was going to be. So there are safeguards in place. You need to have a process. The more you know, the more you're going to understand, and the way less you're going to fear. Catch you on the flippity flop.